Good morning, everyone, and welcome back to this week's episode of the Broker Breakdown. A little bit of a change this week. Mike has decided he would rather be in sunny Florida this week and not be on the podcast. So, Mike, if you're listening, I hope the weather is terrible down there because I know it is up here. But we do have a new guest on the podcast this week, Donald Porter from Remax. Thank you for joining the podcast today, Donald. How are you?
I'm good, James. Thanks so much for having me.
Weather's not looking too great outside, but that's okay because this weekend and into next week is looking great. So I'm looking forward to that.
Yeah, we get time to get the golf clubs out and hopefully get a couple games in.
I'm going up north actually this weekend, so I'm praying because they're a little bit more like intense up there when it comes to golf. So like they will definitely not open if like the conditions aren't perfect. And I've been checking, like it's been on and off rain up there. I don't think it's enough rain to not open, but like Thursday it looks good, Friday it looks great, Saturday and Sunday look amazing for like early May for up there. Like we're looking at like 18-20 degrees up there during the day. So I can't really complain about that.
Wow. Yeah.
And then next week looks like mid-20s again down here. So
it's welcome to May. It may be freezing, it may be raining, and it may be sunny.
Yeah, we might have some snow. Who knows, right?
Exactly.
Well, Donald, like I said, I appreciate you coming on. I know, obviously, you being a real estate agent and what we've kind of faced in the last, 3 to 5 years in the real estate market is obviously a challenging kind of time for not only yourself as an agent, but obviously consumers and getting people in the right home and whatnot. But let's kind of start off. You want to introduce yourself and kind of where your journey has brought you, what you're kind of doing for your clients, all that kind of stuff?
Yeah, for sure. Okay. So, I'm a Remax agent here in beautiful Hamilton, Ontario. I've got a small team, 2 other agents. I had a larger team at one point, and I've learned a lot by having a large team and knowing that you can do a lot more with a smaller group than a larger group. It's not just about warm bodies, but it's about actual team mentalities, which is fantastic. And I'll get into that later if we get there. But my background is actually music. I played professionally for bass, piano, went to school for classical piano, actually, keys. I did all that stuff. Played music professionally. Eventually realized it's not fun living in your mom's basement or your parents' basement. They're still together. So I actually just asked a good friend of mine who got out a year ahead of me and decided to start his life faster than I did, and said, "Hey, I probably should go to school for business, but I have no idea what route. I trust you. You just sign me up." And so he signed me up for marketing, which I honestly had no idea what that was about. And I ended up doing extremely well. Dean's honor list, and went the whole route in that one. And then out of the gate, I was thinking, okay, I want to get into building a brand. I want to like do all this fun stuff that they teach you in marketing school. And I ended up in sales. And I was doing ad sales for a marketing agency. And so I was like, okay, cool. It's got the link there, but I'm in sales. And I just fell in love with it. So I remember early on, someone told me when I was working at Zellers, for those who don't know what Zellers is, it's like Walmart, but the Canadian version.
Love Zellers. My mom used to work for Zellers for like 15 years.
Yeah, so I was working there, and I remember someone telling me, like, why are you working a minimum wage job? Did you know that if you work as a server, you get paid less hourly, and you get server's minimum wage, but the harder you work and the better service you give, the more money you'll make. And that was my first taste of a commission kind of job, where I was like, yeah, like why do I set myself at X amount of dollars per hour? And at the time, I think it was like $6.50 an hour. So I was like, if I can double that by just working harder per hour, I can capitalize on more money, which was how I got myself through schooling and stuff. But so I ended up in commission based sales doing advertising, and I learned a lot there. Was top of the sales floor. It was a lot like the Wolf of Wall Street style. It was pretty crazy, but a lot of fun. And then actually I cold called a client, and I ended up, long story short, getting in there for an interview, and they picked me up, and I started doing industrial sales. And I do not like industrial sales. I'm not a huge fan of factories, but I was selling the scrubbers and sweepers and did all that stuff and did pretty well there. But I knew it wasn't for me. And then my old VP of the previous company had said, "Hey, I'm starting doing a startup company. You want to come follow me?" Joined the startup company. It was pretty rough. It was a very hard concept to get across, but it was pretty good. And then the week that I proposed to my wife on the Tuesday, and I proposed to her on the Saturday. I had the ring in hand. I told my boss the day before all about it. I'm like, this is super exciting. It was December, just before Christmas, and the company went under. So I was now jobless. Proposed to my wife, and she was like, "I was shocked that you proposed to me. I knew it was going to happen eventually, but not when you were jobless." We got married later on, but I was unemployed for a period of time, and I was just doing job interview after job interview. I'm like, I kept getting selected for these jobs, but I was like, I don't like any of them, so I kept turning them down. And finally, I was like, oh my goodness, I want to be broke and married and in massive debt. So, and I had a house. I have a house at the time, so I was like, I got to pay all these bills, and I'm being a bum. So I just jumped into IT sales for 3 years. Don't know anything about IT. I can't even work a PC laptop properly because I've been Mac since like 2000, and just learned really quick that IT sales is super easy, and you don't have to know what you're doing. All you have to do is make the connection between someone on your team and somebody in their office, and it's usually the IT manager or whatever. And they're always looked down upon, but they're fantastic humans who are very smart but looked on as nerdy. So they all you gotta do is just get a human connection, and it's great. And then I guess fast forward from there, I kept looking at job opportunities and I didn't like anything. While I was playing in music, I also worked for renovation companies, so I know a lot about houses, know a lot about structure, my background in marketing, my background in sales. Someone was just like, "Why don't you just do real estate?" And I figured it was like an old person's game. And then I started looking on social media, and I was like, "Man, I know these people. If they're doing real estate, I can do it better." So jumped into real estate and won a bunch of awards with Remax right off the hop. Rookie of the year, MVP. Um, Within the third year, I was hitting the Diamond Club, which is over $1 million in commission sales. Just started breaking records pretty quick, and grew a team of up to 10. Realized I was babysitting the majority of the time, and it was soul destroying because you can pour into someone all you want, but doesn't mean that they're going to do the work. You can't force them to do something that they're not going to do. Um, Made a whole lot of changes, did a lot of growing last year, trimmed the team right down. I don't think we're going to hit diamond this year, but that's fine because this year is more of like a rebuild, regrowth, more systems, more structures, and getting the right plans in place, which would obviously parallel with your world with insurance, is just preparing things better. And then, yeah, just focusing on marketing, advertising, and doing things properly, and basically customer service. And I read a ton of books because my philosophy is if that person who wrote that book spent probably 5 years or so becoming an expert in that field. So if I can take a couple days and read that book, I've just gained 5 years of knowledge from somebody, and I just got to apply it.
That's a great story. Like, literally went from Zellers, which love Zellers, like I said earlier, but yeah, kind of coming to where you are now. And I wish I was a big reader. Like, personally, like, I don't read that much, but I know a lot of people do, and I've had bosses in the past that were huge readers and whatnot. And like, I love the idea of taking the knowledge away. So I've bought some books in the past, and got through them and whatnot. But yeah, I applaud you for
It's
kind of for that journey, because that's not a very easy journey to go through.
well, it was literally I kept hearing leaders are readers. I just kept hearing that over and over and over again, and I was like, okay, I'm going to start reading. I hate reading. In high school, my philosophy was if the book is good enough, they're going to make a movie of it, and I'm just going to watch the movie. So,
Yeah.
so like books to me were always brutal, but then forcing myself to do it, and I used to take like an hour to read 10 pages, which is roughly the length of most chapters. I was like, oh my goodness, I spent an hour, and I'd read it, and my brain would just drift off with the ADD mentality and be like, I don't know what the last page is. I got to read that again. So yeah, it's a skill that you got to work on.
Yeah, you know what? I should probably get more into it because there's been a lot of books that I've bought and they just sat, or like the books that I probably should reread that probably have a lot of like good like kind of ideas and like help basically in them for me. So definitely probably something that on my list I should probably get back into.
Yeah, I can always give you recommendations. I think the number one book that I would recommend out to most people, especially in 2023 with anxiety and depression and everything we just went through being so high, is Anxious for Nothing from Max Lucado. That's the number one book that I've recommended, and I have not had anyone read it and get disappointed yet.
I bought what was it called? The guy from Dragon's Den.
Kevin O'Leary
No,
or
no, 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 no. From like the beginning, like the first season, um, the Wealthy Barber or whatever it was called.
okay, yeah, I haven't actually read that one.
Um, yeah, the Barber by Dave Shilton.
Okay,
That's a great book.
I'll
So
have
if
to
you
take
ever
a
get a
look.
chance, I would definitely get that book. That book's great, and it's like I would almost reread that book because actually there's two. There's the first one, and then he does like the returns like number two. So I would definitely look into those ones because those ones were great books. Like I would definitely reread those if I ever got a chance to.
Sweet.
But yeah, but kind of moving into the episode, like I was saying earlier, we've gone through this really huge market change, not only just in insurance and real estate, but I think just society as a whole, obviously, since the pandemic. Um, what have you kind of seen? Like, it's not obviously a huge secret, but what are some kind of changes you've seen in the real estate market since kind of in the 5 years that, or maybe, yeah, let's say in the last 5 years, what have you seen really change in the market so far?
Yeah, I would say that fear of missing out is probably the most like common thing that people can say. So if you look at it from a numbers and stats point of view, which is what I like to do because the stats don't lie. If you look at it, September, October, November of 2022 was the best time to buy in real estate. Even up to January 2022 was the best time to buy in real estate in the last 5 years. But because the interest rates were slowly escalating and then even still like they haven't changed since December, but everyone was so scared to buy. And so they didn't do it. But yet that was historically in the last 5 years the best time to buy. Now we're starting to see things heat up again. There's a low inventory because again the fear of missing out on that price point is slowing down. But meanwhile, you have the rest of the consumers being like, well, they didn't increase the interest rates and they could have this time around, so they must be done. So now they're all diving back into it, creating a frenzy, and the prices are going up. We're seeing bidding wars back again, which is crazy. Like that, the interest rate didn't change, but yet people were afraid to buy in the fall with a lower interest rate than they are right now, and the prices are going back up. So it doesn't even make sense.
Do you think that kind of attributes though to kind of how the market is at that time, where like most people, well, I wouldn't say most people, but I do see that a lot more action in that spring summertime because no one likes to move in the wintertime. Like no one wants to be moving and there's snow and it's cold. So do you find that that might be a little bit of a factor, or are there other kind of attributing factors to that as well?
It's funny. Like a lot of people focus on the spring market, and that's because of the school year. But if you think about the population of Canadians, or even North Americans, how many of them are actually moving in the spring? Not a ton. Because of the spring market, quote unquote, idea that people have, that's when they want to buy because that's just like a myth. That's the best time to buy. Actually, the best time to buy is the fall market. So if you're going to buy and like buy and sell at the same time, the fall market is usually the most stable because that's when you have empty nesters realizing, okay, their kids aren't coming back home, so they're selling those larger homes, and then they're downsizing. You also have a lot of people who are looking at their parents moving to retirement homes. They're preparing to do that in the fall because the winter is usually when slips, falls, and breaks happen, which would shorten their life expectancy. So the fall is actually historically October is my best month year over year, but except last October was my worst month in my history of my career. So it doesn't actually, it's crazy how everyone focuses on the spring market because it makes sense. You want to move in the summertime. You got kids, but only a small portion of people actually have kids that matters to.
Interesting. I was actually reading an article before we kind of came on here, and from the Canadian Real Estate Association, they're saying that they're expecting home prices to decrease about 5% over this year, but then next year basically increase that 5%. Do you think that's realistic, or do you think that we're already going to start seeing another huge jump in prices, or even possibly a decrease in those prices?
I think the biggest thing would be what happens in June and July. So July, if you look at the from post pandemic to current times, July was the biggest impact they made on the rate change, where they did a full 1%, and that was like hammering the brakes on what was already a slowing down machine in the market. So they didn't increase rates. They've now done a couple shifts and changes and created a little bit of a frenzy. Plus, we have a small supply, so you can actually see the trajectory is going upwards again. So if that happens and you have more inflation and the Canadian government wants to get involved like they love to do, it might not be June, but you could see an increase in July happening just to try and curb that down again so we don't get out of control, which would make sense. If they do that, then yes, you're going to cause the consumer mindset to shift and slow down again.
One thing I know that you're in this area, so it's been a big talking point recently, but maybe kind of moving away from the real estate, but maybe into kind of rentals.
Yeah.
The whole Airbnb Verbo thing, where they're now going to be taxing people if homes are left vacant for a certain amount of time. Um, do you think that was the right move to go to? Like, is that really just going to hurt rental? Like, I see what they're trying to do because they want to get Airbnb and Verbo kind of those properties off there to kind of allow more people to rent them like long term. But was that really the right kind of choice to go to? Like, is that really just going to really just damper an industry to the point where possibly it becoming other municipalities might also take on the same kind of tax reform and really hunt down people that are just using rental properties for a short-term rental?
Yeah, so that's a wide open conversation. So one in Hamilton, where if you look at the legislation, when they changed the legislation to discontinue short-term rentals unless it's your primary residence, one of the key factors in it is mind-boggling. It is the fact that they wanted to slow down tourism, which doesn't even make sense. Tourism is something that every city wants to thrive for, but in Hamilton specifically, they they found it brought too many tourists, which is one of the things that they said. Doesn't make sense to me, but it's one of the things that if you look at Hamilton as a whole, we don't have a lot of hotels, but we have large hotels. And I know that the short-term rentals was hurting that. Also, with the amount of money that you have generated from a short-term rental, and it is quite large and lucrative. But then all of a sudden, you've seen an oversaturation happening with the short-term rentals in Hamilton around fall, which is what started the red flags. The other problem with that is when you have an oversaturation, you bring down the cost per night. That cost per night lowers, and then you create parties because you'll have some bunch of high school kids or maybe older college kids who are like, well, I don't want to trash our house. So let's get a cheap Airbnb. A couple buddies put the money together. We get one night, we go crash it, and you throw a party. That's not good for the neighborhood. That's not good for anybody. And it's uncontrollable. So that's one thing that those are the things that they kind of kept in mind. I actually ran an Airbnb, and for the most part, we were great. We had no complaints. Everything was fantastic. We had fantastic guests. But I think twice in our history of over a year running an Airbnb, we had parties. And it was only because we lowered the price. So it's one of those things. It's like the Lululemon story. When Lululemon was selling their pants for like $25, $30, no one bought them. The second they shot it up to over $80 for the pants when they first broke out, everybody wanted them. So it's that mindset of when we increased the rates, it became okay, this is good. I'm going to respect the place because it is more expensive. But as soon as we lowered it, we got the wrong mentality and mindset of the people coming in, and we tried to vet them as much as we could that they weren't coming to party. But you can't get everyone perfectly.
Yeah, there's only so much you can do, and like I'll be the first one to say, like there's been times like when we were a little bit younger, like the same thing. We would like go on like a weekend getaway, and like we'd go, and instead of like renting like four hotel rooms, you just get like one big home Airbnb, and that's kind of what you did. Like we were very respectful. Like we didn't like trash places, but it's not like we didn't have a few drinks and then go out to dinner or something like that, and then come back and have a few more drinks and just kind of hang out, right? So, but yeah, it's just I find a lot is that a lot of my clients right now from the insurance side of things is that short-term rentals a lot of insurance companies don't want,
No,
and
yeah,
that's now being trickled down into, well, now the short-term rentals are being targeted by governments and being taxed more because they don't want them in their cities as well, right? And you brought up a great point. Like, yes, Hamilton, off the top of my head, I can maybe think of two hotels in Hamilton, Sheridan downtown and the Sandman by the QEW. Other than that, I can't even think of any other hotels in
you've
Hamilton because
got
there's really not many.
there's only one on the mountain. That's the Marriott, and you also have Staybridge Suites downtown in the core as well. But
Oh, the new one, right?
yeah. So,
Yes.
but other than that, you really don't have other than those motels that I wouldn't even want to touch the doorknob. It's not the best part of town.
Yeah. Yeah, that's interesting. It just, yeah, it's I think short-term rentals have become a little bit of a soft spot. Like I said, not only in the insurance world where they are becoming more, and I wouldn't even say just short-term rentals. I think rentals in general on the insurance side of things have become a big talking point because a lot of insurance companies have said, you know what, this is a product that we don't really want to get into right now, and they've become a lot more expensive over the last, I don't know, 5-8 years, maybe since I've been in the industry. I've definitely seen a big increase in them since I've got in here. So it's not the greatest kind of talking point because again, people were using them like crazy. Like you said yourself, you had an Airbnb, you had rentals and stuff, and they were a great kind of source of income, right? But
They were, especially the summertime. Very, very lucrative in the summertime.
yeah, because realistically, you have a big group of your friends or whatever, or like for us, like golf weekends and whatnot. Like we don't want to have four hotel rooms or whatever it might be. Like why don't we just get one big house, right, and just kind of be under one roof for the whole weekend, right? It's usually less expensive as well, and you're getting a nicer home, more space, the
Our,
whole home instead of having to share with, like I said, like 20 stories of other people. You don't know what's going on, right? So
our biggest thing was weddings. Like when wedding season came around, that's when we were busiest because we had brides would do their stuff at the house there. They don't have to worry about getting their house all prettied up. We'd had our house already, the Airbnb already gussied up really nice, and the brides would come. They had bridesmaids sleep overnight, or sometimes you would have it because parents were out of town, so they would come. They would stay at the Airbnb. They'd stay there all week to prepare for the wedding, be on hand, and then do the wedding, and then they'd leave on the Monday.
yeah, that's actually a great point. I never even thought about that because
Yeah,
that's what I know. A lot of people that I know that are getting married either this year or in the past recently, they've done that. And before, like a lot of people would either get hotels and stuff or whatever it might be, but a lot of people are moving towards those Airbnb and like Verbo and whatnot, right? So we did an episode actually a few weeks ago on Airbnb and Verbo and kind of that kind of um, market, and we also kind of moved that into Turo. If you're not familiar with what Turo is, it's kind of like the same thing of Airbnb but with vehicles. So kind of getting away from like the old school like enterprise and like budget rentals. You can basically go on like an app and like rent cars through there.
sweet.
um yeah, so that was a great episode. Like I said, it's a huge talking point in insurance because a lot of people don't want rentals, definitely don't want short-term rentals, and definitely do not want student rentals right now either.
Yes, yes. Student rentals are, especially with the pandemic, it's proven to be quite volatile.
Well, and two, I know Hamilton's a big kind of red flag for it, but a lot of student rentals, especially like by McMaster, you would get like these 1,000 square foot homes, and they would be like they'd have like 10 students in it.
Hmm.
And I remember a few years ago, the city was really cracking down on that because you, like I said, you'd get these small little homes and there'd be no like common areas. There'd be like a kitchen and like every other part of the house was like literally split up between like how like rooms because
Yep.
there was such a big issue with student housing a few years ago, and I guarantee it's still not fixed because anyone that I know that either went to McMaster or currently goes to McMaster still says the same thing, that like there's homes that are like tiny and you're fitting like 7, 8, 9, 10 students in one home, right?
Oh yeah. Yep. No, I agree for sure.
And the insurance companies just have been like, you know what, we like there are, and don't get me wrong, there are insurance companies that will solely focus on student rentals, but you're going to pay a premium for that, right? But again, if you're packing 10 students in a student rental at, I don't know, let's say on the average of $400 a room, that's $4,000 a month, right? So you, unfortunately, you're going to have to pay for a student rental like that for insurance purposes. Just there's a big risk.
Oh yeah. Oh, huge risk.
The next kind of topic I wanted to kind of bring up, again, another huge talking point, and I've seen a lot recently with a lot of my clients, and maybe something that you might not see just because you're kind of at the other end of the spectrum when it comes to like the real estate transaction, but private mortgages. Have you seen a lot of your clients kind of go towards that, or have you heard a lot of that kind of really picking up in the last little bit because of interest rates?
Oh yeah. They're definitely quite common. Uh, Actually, speaking of private mortgages, I can tell you a guy who thought he could cheat the system, and he's a very, very smart guy. And he picked it up back in, I think it was 2019. So you're allowed to have 5 houses before you need to change over into like commercial or anything like that, because after that point, you're deemed to be looked at as a business, not just as an individual. And so this guy was going up on his 5th house, and he decided, okay, let me play the game, and I'm going to buy with Scotia. I'm going to buy with RBC, and I'm going to buy with, I think it was CIBC or TD or something like that. So we got 3 pre-approvals from 3 different banks. And then we went shopping. And I told him his risks. I told him that he's going to get himself in trouble. And what happened was he bought 3 houses in the exact same week and tried to close them all in the exact same time to try and have every bank think this is the 5th one, and they're not going to recheck. The problem was one of them had a tenant in it, and we needed to push the time period out. That resulted in him not closing everything in the same week. So his 8th house, or 7th house, five, six, seven, yeah, 7th house, ended up having to go through a private mortgage. Now, the private mortgage, again, I do not recommend this at all, but this is how this story played out. The private mortgage, he didn't let on that he had that many houses, and he got the private mortgage. Once the private mortgage found out how many houses he had, he's like, you have 3 months to pay us back in full, or we're taking the house. And yeah, we ended up having to sell it. He did make a profit on it because he got lucky with the timing of COVID kicking in, but it was just one of those things that he took a major risk. And then also when his insurance company found out about something to do with that, and you'd probably be able to speak more light on that, but when the insurance company came out, they said you also have 90 days to find another insurance provider.
Yeah, and that would basically break down to is a lot of insurance companies, they just don't like private mortgages because there's a lot more risk. There's not a lot of rules behind them as much as they're obviously like a financial institution.
Yeah.
So a lot of companies have gone away from private mortgages. And if they do private mortgages, which I'm not saying a lot of companies don't, it's just like there's a lot more rules, there's a lot more questions that come to a private mortgage. The biggest thing that we're also seeing too in the insurance world is second mortgages. So a lot of companies are having a lot of issues with second mortgages, especially if they're private mortgages. So I just had a client recently that got a private mortgage, and flat out they were told, no, we can't, we have 30 days and we have to find coverage for it somewhere else. So it's and again, I'm not saying private mortgages are bad at all. No way, shape, or form am I saying that. It's just from an insurance standpoint, and for whatever reason that they have for it, companies just are very, very skeptical about bringing on private mortgages, and for what reason that they're going private, right? Because usually with private mortgages, usually the rate is actually almost higher than what a financial institution might be offering you, right? So I would just, like I said, if you are in the market of buying a home or rental or whatever it might be, obviously check with your insurance company to make sure that they're going to be okay with that and actually like disclose it. I know some people are always on top of like, oh, I don't want to disclose this, or I don't want to disclose too much to my insurance company. But the problem is if you don't, and we find out, which 9 times out of 10, we find everything out.
Mm-hmm.
It's gonna just come back and bite you. Like realistically, like it's gonna either turn into, you didn't tell us, and we're basically giving you 30 days to go somewhere else, or we're going to flat out cancel you immediately, and then you get canceled for like misrepresentation, and then it becomes a bigger long-term problem, because then a misrepresentation cancellation on your record then becomes a massive talking point, and then almost no insurance company wants to take you, because then they look at you and they're like, okay, well, if you lied in the past, why are you not going to lie to us now when you're trying to get insurance currently?
And some of it's out of ignorance too. I can actually think of one client that kind of fell into that category, and um, they had an aluminum wire in their house. Now, for those who don't know, everyone thinks that, you know what, knob and tube is the worst thing in the world for a house. It's not great, but it's not horrible. Like, you've had houses who still have knob and tube, but they're fine. They've been there for 100 years. Knob and tube is not horrible. Aluminum is much worse. Although aluminum is the best conductor of electricity. If you look outside, all those wires hanging there, they're all aluminum. It doesn't until it goes into your house, it becomes copper. The reason why aluminum is bad is because every time that electrician has to stretch it and around a corner or 90-degree angle, you have microfrays in the copper. Now that's fine until the braided material outside of the aluminum breaks down. Now you have microfrays, and they want to arc around a corner. So the fastest way to arc through to that is now through the dried out wood. So aluminum becomes worse. Knob and tube isn't bad. It's just we developed and got heavier loaded like appliances. So like your toaster, your hair dryer, microwave, they draw a lot more power, which heats up the cable, which then causes the issues. Again, a lot of that comes down from the breakdown of the fibers holding the cable involved. But a lot of people look for knob and tube, like, oh, there's no knob and tube, we're good. But what they won't look for is aluminum wiring. And when you have aluminum wiring, first off, aluminum and copper corrode each other. So it causes an issue and a disconnect. So you actually need a special paste to get the two of them to marry together without the oxygen oxidizing the problem. And all the stuff that you buy, or majority of the stuff that you buy, light fixtures and all that kind of stuff, it's all got copper ends that you got to connect it to. So that is one area that I've seen actually a real life scenario where someone misrepresented but had no idea that they actually had aluminum in their house.
Yeah, because a lot of people don't like. You'd be shocked of how many people I talk to, and they buy a home and they can't tell me how old the roof is, their ampage of their home, what their home is like, what their plumbing in their home is, what the wiring in the home is. And I'm like, well, didn't you, if you just bought the house, like, wouldn't you have the real estate? And I'm not even lying. I get all the time, they're like, well, the real estate agent didn't disclose this, or it's not in the real estate listing. And I'm like, well, aren't those questions you should be asking? Because another big talking point too is a lot of insurance companies now, and this was prior to COVID, but it's still happening now. A lot of insurance companies are doing home inspections. So what will happen is you'll place coverage with company A, and company A does an inspection a month or two after, or however long after. And then if they do an inspection and they find all this stuff, all that happens is they go, oh, sorry, we can't cover this. Like, you'll have to find coverage in 30 days because we can't cover this, this, and this. Mm-hmm. So it becomes an issue because, yeah, and I get, like, sometimes it is ignorance and sometimes it's just blatant, they just don't know and don't ask the questions, right? But yeah, as a new home buyer or whatever it might be, I would be asking those questions to make sure, like, what is actually in my home or the home that I'm potentially buying, right? Am I going to have to replace my roof in the next 2 or 3 years? Am I going to have to replace the water tank? in the next 2 or 3 years? Because that's another big talking point for insurance. A lot of insurance companies, again, do I believe it's the best practice? No, but some insurance companies will straight up say, we won't cover the water tank after 10 years. I think that's a little bit ridiculous, but I understand where they're coming from, because the biggest claim in homes now, and have been for the last, 10 years or so, is always water. Water is the biggest claim that we see on homes right now.
And this is an area that I think that they should actually add more sophistication to, because you're an insurance company, so you provide financial resources when things break down. But where I think that they should do these home inspections, and I almost agree with maybe just having a little more eyes on the property to better educate people. What happens if, let's say, I have laundry on the second floor, or main floor laundry, which I don't, but I wish I did. Main floor laundry, but I actually put provisions in place to protect my home. So if something happens, because usually your big water problems come from three spots: your laundry, your dishwasher, and your hot water tank. So if you put certain things and provisions in place, they should, is my theory, discount you for those provisions. So what I'm seeing a lot of smart homeowners do is those shower basins. You can get a prefab shower base in your shower kind of thing, the big white rectangle,
Yep.
White square.
Yep.
I'm seeing a lot of smart homeowners put that in their upstairs laundry, let's say, and plumb that right into the drain. So it goes right through the floor, right, ties into the drain where the water is draining out anyways. And if there was a flood or a spill or a problem, it's leaking out into the water base and then going down the drain. So it's a self-isolated issue should there be a problem, which is essentially what insurance is. I'm paying for something now to prevent something in the future, but you're actually just giving out monetary funds, and smart homeowners are doing this so that way, oh great, the washing machine's dead, but I don't have a flooded house now.
And that's the thing that I try to educate my clients on all the time is like, yes, like we hope this doesn't happen, but in the future, if it does, you're going to be covered for it. But a lot of people just look at it as a transaction, right? Like they're like, oh, this is never going to happen to me. I don't need this coverage. I don't need this coverage. I just want to pay the cheapest I possibly can pay and hope to everything in the world that nothing ever happens to me. But when it does, I'm still going to complain because I was the one that declined it, but I'm still going to make it your problem because I declined it. I signed off on it, but now I don't have coverage for this. And now I'm going to have to pay out of pocket to fix my home when I could have just covered it properly and paid a little bit more every month and known that it was going to be done. But that's the problem. We live in a society right now, and we've had for a long time, where a lot of people, and I say this to Mike all the time, we are a reactive society, not a proactive society. We would rather react to something happening than proactively trying to change and prevent it from happening.
Well, that's like everything you just said is so paralleled with my own business. I am not the cheapest on commission. I'm not the most expensive, but I'm definitely not the cheapest. And there's a lot of, especially with an oversaturated market of real estate agents right now, and listings are starting to move really quickly. If you get, they're discounting, they're dropping their pants right away and saying, "Oh, do whatever you want to get this listing." And it's like you said, people are just paying the cheapest amount, but they're not actually getting the right quality. Where you come on board with someone like myself or anyone on my team, I train all the agents on my team to look for certain things, to give you preventative measures. Like, one thing that I don't understand, if you are a real estate agent and you do not walk into a home, especially if it's older than 20 years, with a moisture meter and electrical tester to help your clients buy the biggest purchase of their life, what are you doing? And that's the thing that I think the public forgets, is it only takes 5 multiple choice exams to become a real estate agent. Doesn't mean you're qualified. Just means you pass 5 multiple choice exams. So with us, yeah, we're not the cheapest on commission, but with us, we're doing exactly what you're talking about. We're being proactive. I'm bringing the moisture meter in. We're checking the windows. We're checking certain things. We're finding things. Maybe we're not finding anything, but we're trying to find problems. If you love the house, I would rather us spot something than you spend $500 on a home check. I can't remember, my home inspection. And we always say we're not home inspectors, but these are little machines. And if the machine goes off, it's registering something. Now, I'm not going to tell you for sure there's a crack in the foundation, but I'm going to say there's a lot of evidence here that could suggest one. It's time to get a home inspection.
And you know what? The perfect thing that I would say to that is you get what you pay for, right?
Exactly.
I get all the time, and I had it literally yesterday where a client didn't want to pay. I think it was like $20 more a month or something than what she was currently paying or what she got quoted elsewhere. And that was like 2 months ago. And I got a call and oh, they dropped the ball. They didn't do this right. They didn't do that right. And I'm like, well, like you kind of get what you pay for, right? Like
Yep.
I'm not like at the end of the day, we have 20 plus options on the personal side. We have 50 plus options on the commercial side. Like I said, I go to all my partners and I always tell them, I'm not going to guarantee you I'm going to be the cheapest. I will guarantee you I'll give you an option though. I'm not going to say your client's going to like that option because some clients are very just premium based clients. And you know, at the end of the day, that might just not be the client that I really want. Right. But I will guarantee you that I will give you an option and your client an option. But like I said, at the end of the day, if your client doesn't like that option because of premium, that's not, like I said, that's not because I'm not doing my job properly. It's because the touch points or the pain points that the client might have, right? But like I said, you get what you pay for. And I always give the analogy is like I give two. Um, when you go and buy a new phone, and I know you're an Apple guy,
Yeah.
but you're not going to Rogers, Bell, Telus, whoever you're going to, and you're not buying a flip phone. You're buying an Android or an Apple product. Same thing when you go out for dinner. When you go out and you're like a first date or something like that, or like an anniversary or a birthday, you're not going to McDonald's or Wendy's. You're probably going to like the Keg, Red Lobster, one of those big like fancy restaurants. So why for your insurance or even for your real estate transactions, why are you deciding to spend less money in those cases and go cheaper than you would like on a cell phone or um a night out? It
I
just
think it
doesn't
com-
make sense to me.
I think it comes down to the education factor, which is why, like, one of the philosophies we have here on the team Porter and Associates is education first, and all of our marketing is based on education. So, like, let me just flip the script to you for a second. When you're doing mortgages, not mortgages, insurance, you're insuring based on the square footage of the home, right? The larger the square footage of the home, the more their insurance is going to cost.
Yeah, because it's going to break down a rebuild realistically. Like if you have a bigger home, it's going to probably be more insurance premium because again, for us to rebuild that home, it's going to cost more money because it's bigger.
So then where do you get your square footage? Who tells you what the square footage is of that home?
So it depends on the transaction realistically. So if they're buying a home, then we usually go off what the real estate transaction looks like. But we also have systems like behind the scenes that can show us like permits and building permits and stuff that kind of give us a very accurate square footage amount. Again, that could be off because again, I see all the time where like, for example, someone has owned a home since like the 80s, they tore it down and rebuilt it. Well, the permits aren't going to be in our system yet, right? So that's really just going off of what the drawings look like from the engineer or what the real estate listing is really showing us if it's not in our system properly. But I would say 80% of the time it's in our system already and it's fairly accurate.
So my favorite thing about this and everything you just said, and for the Americans listening, it's going to be a little mind-boggling because we do not include the basement as part of our square footage. But on an MLS listing in Canada, you have options to see where the square footage came from. And my favorite thing to do is when I'm looking with clients who are looking for 2,200 square feet. That's again for the Americans. That's just above grade. That doesn't include the basement. So 2,200 square foot, 2,200 to 2,400 square feet is my favorite area to look in with clients because they're going to look on MLS and they'll say 2,400 square feet from the builder's plans. And then we go to another one that's a little older and it's not from the builder's plans. It just says 1,900 square feet or 2,000 square feet. And they're like, okay, well, we're not going to like this one that's smaller. And then we get in there and then this 2-car garage usually on these kind of houses. You're like, why do they seem like the same size? I actually like the older house better, but it's a smaller square footage. It doesn't make sense because your builder plans include the garage. Most of the time, they include the garage. So if you're actually looking at it side by side, the livable square footage of a 2,400 or 2,300 square foot double car garage new build is exact same as a 1,900 square foot house built in the 80s. like the square footage in the inside, the livable space. And that's the part that I always like blow their minds when they see that for the first time. They're like, oh my goodness. They say the different square footage, but the livable square footage is the exact same.
But that's the education point, right?
And I
Like no
almost
one's
wonder what happens if you went through with a LiDAR or Matterport and actually did a LiDAR scan or a Matterport scan of the interior of the house and shot out the floor plans to you from a professional. That might cost them $200, but I wonder how much money it would save if they just dropped the square footage of their house by 600 square feet over 5 years.
exactly. But that's the education point, right? And for me, for example, like how many times, like you obviously drive, how many times has your insurance broker told you what accident benefits are on your auto insurance? How many times does that come up in conversation?
Oh, I don't even think at all. Not even
Exactly.
once.
And every time I talk to people about accident benefits, they have no idea what I'm talking about. But they don't know that it's regulated by law. You have to have them. It's coverages that in event of an accident you have. So like rehabilitation coverage, income replacement, death benefit. You can increase those limits if you want to, but they give you a minimum amount of coverage. But anyone that I talk to has no idea what I'm talking about because they've never heard of them about them before. But again, I always educate my clients because I want to make sure, you know what? Yeah, maybe $400 a month is or a week is not good enough for your income replacement. We might need to increase that, right? You need to give these ideas to your clients to make sure that they're making the best educated decision on what they're making a purchase on. Rather it either it be insurance or it be real estate or whatever it might be in between, right? So the more education you can give, the better someone's going to make an educated decision on.
Yeah, absolutely. It's all about education, and that's the number one thing. And it blows my mind how fast people jump to price over education.
I understand it to a point because like how our economy is and everything right now, but like I said, at the end of the day, from an insurance standpoint, why I always say, why are you going to pay for something and it never be used? Like, why are you going to just hope that nothing ever needs to be used and then just really just cross your fingers and be like, oh, this is never going to happen to me. And if it does, then I'm like, you kind of, and there's people that literally straight up know that if it happens to them and they're buying this product, they're going to be in a bad position, but they're still like, it's fine. Save me $50 a month. I'm good with that. And it just, like I said, we live in a world right now where we're not proactive. We are reactive to things that happen in our life.
Yeah, and to go back on that water heater thing, proactive versus reactive, I don't know how many people are going to hot water on demand, which is great. Hot water on demand is fantastic, especially for a seasonal property. But what they forget to add into that hot water on demand is if unless you have a water softener, if you live in somewhere like Hamilton where you have harder water and a lot more calcium, the life expectancy on that thing is very short before it starts to malfunction because you don't have the calcium being removed from the water. The same thing happens in a regular tank water heater, which you see those things blow and there's a huge buildup of calcium in the bottom. Well, that happened over 10 to 12, 15 years. The same thing happens in the hot water heater on water on demand, but it's a 2 liter pail. So it's going to happen a lot faster unless you have regular maintenance on it or you have, and you have to clean it properly. And I would definitely recommend a professional to do it. Or unless you had a water softener. So like those things there, proactive versus reactive, and the studies are going to start showing more and more and more with that hot water demand is becoming more popular. That the life expectancies are so short unless you take care of it. Same with your car analogy. Unless you take that thing for routine oil changes, you're going to have a jammed up engine sooner or later.
No, cars are not built the way they used to be built at all. Even like in the last 10 years, like I used to drive an '06 Honda Civic. That thing's still on the road. My sister drives it now. And like even I have a 2021 Ram 1500 and I've driven it 50K. Yeah, it probably seems like a lot in 2 years. I have to change my tires already. And I could have changed my tires at like 35K, 40K. Like I put another 10,000 kilometers on these things that I shouldn't have because they were so like bald basically. And it's like how in 40,000 kilometers have these tires gone bald? And I'm not a very aggressive driver. I don't slam my brakes on. Like I don't do any of these things that cause the vehicle to wear more. It's just the way they've built the way they build stuff now is insane. Like the tires alone like should not be lasting me 35,000 kilometers. That's just insane. That's just nuts.
Yeah, I agree.
But it's the like I said, it's the quality. They want to push stuff out as fast as possible for the least amount of price, but the quality suffers, right?
Exactly. Same with these real estate agents. They want to pump them out fast as they can, but they again 5 multiple choice exams, and then you pass. It
Well,
should be
for
yeah.
your side, like how many new builds do you see that you go into and you're like, oh, that's not going to pass inspection. That's not going to pass inspection. They just try to pump all these new build homes out as fast as possible to get obviously them on the market, but they're made so poorly. And like literally in like 5 years from now, I see like new builds that have been around for less than 5 years and they're already redoing the roof. And I'm
It,
like, how?
in 2020 or 20 yeah 2020 fall of 2020, I remember helping a client buy a new build. It is only 2 years old. No, not even a year and a half, maybe. And we were going through this unit, and I was just looking at the layout. And I was like, "Now this one's a specialized one that has a rooftop patio, and we're in the basement." And I'm looking at everything, and he's like, "Donald, why you look so puzzled?" I was like, "I don't. I know it's a new build, and like most people just bypass the inspection on this one, but something isn't sitting right with me, and I can't quite put my finger on it." And I honestly couldn't figure it out. I was like, I just don't feel right about this one, and I can't figure out why. So I was like, I will pay for the home inspection. I know you said you don't want one, but I just want. I'll do the quick one. Just something structurally doesn't seem right here. So we got the home inspector in, and we were looking at it, and I was like, I just went to the basement. I was like, I don't know why, but this basement doesn't feel right. And then in about 5 minutes, he figured out they're missing a beam. They're missing a post. There is no support from the center of the house down. And they got a hold of the. We went and talked to the listing agent, who then got the builder involved. And sure enough, this new build missed an entire structural post in the basement
Wow.
that's supposed to span 2 floors and a rooftop patio. So
That's
it was
insane.
it was, and I think what set me off was like the floor. I saw the spot where the footing looks like it was supposed to be because of the slight bevel in the concrete. And I was like, I'm pretty sure there's a footing there, but I also was like, something just doesn't sit right, and it was that whole column missing from the I beam to the footing.
But that just goes to show how much you actually care for your clients, right? Like who else is really going to be doing that, right? Like who else is really having that kind of mentality when going into a purchase like that? Because I know most people would just be like, okay, let's sell this home, let's go to the next one, right? But you're actually like sitting there like, you know what? Like this seems off to me. Like let's get this double checked and make sure. It's the same with me. Like there's times where I have to sit down with clients, and again, it's really not my part of the transaction, but I see people buying cars, and I'm like looking at the bill of sale, and I'm like, this just doesn't look right. And
Yeah,
then I call them. I'm like, did you read this, this, and this? And they're like, well, no. And I'm like, do you know how much you're paying in interest for this? And they're like, well, no. I just need a new car. And I'm like, well, maybe you should take a look and like see that. And again, like I don't need to be doing that, but it's just like I don't want people to be making a bad financial decision and long term. Because again, when you're buying a vehicle, you're probably going to be in it from anywhere from 5 to 7 years. So imagine you buying that vehicle and looking at how much interest you're actually paying over that 5 or 7 year mark. And most times it's like more than what the vehicle's even worth. And it's like,
mhm.
don't do this. Like this is a bad financial decision.
Yep, definitely should be looking at things, and that's where, as the market started to decline because in raising interest rates, it was almost predictable as to where the prices were going if you're educated, because all you got to do is watch the affordability. So what they're paying here per month for a $800,000 house or whatever it would be, their mortgage payments are going to go to this. So you just got to go backwards. So if they're paying $4,000 a month for this house, and the bank says you're qualified to $4,000 a month, with the new interest rates, what's that look like? What's $4,000 a month mean now? They're not saying you can't afford less per month. It just means that because the interest rate, you can afford a lower price point, but your mortgage payment's still $4,000 a month.
wrapping things up here, kind of the last question I want to have for you, and I kind of leave this with any guests that we come on.
Yeah.
Um, what's the future look like? What's real estate look like? Let's say in the next 3 to 5 years in Ontario, in Canada in general. Like, what do you see actually realistically happening?
Yeah. I said earlier on that I like books, and one of the best books for Canadians to read is The Pig and the Python. And it's written by an author in Ottawa to understand how the baby boomer generation has impacted North America, but especially Canada as a financial vehicle. And so The Pig and the Python, again, great book. But where I'm starting to see things is I think with the massive increase of new immigrants coming to Canada, I think real estate is going to rise. I think that we are going to be within 3 to 5 years at a spot where, unless you own a house, it's going to be increasingly difficult to get into the house, and the middle class will be pushed out, and it'll be like owners versus renters, and it will start to divide. The reason for that is the mentality is so different from people from the Middle East or India, where a lot of the immigrants are coming. And I have no problem with immigration. We actually need it if you read the book The Pig and the Python, because of the wreckage that the baby boomers are going to leave behind. But with the importance that that culture places on land and ownership and occupancy, and they're coming in with a lot more money than we have as North Americans, because we do spend it foolishly if you look at a budget compared to how they spend money. I do think in 3 to 5, maybe 10 years most, you're going to see it become super challenging for like my kids' age to get into real estate unless I create a way for them now.
Well, 2 points I want to bring up to that is you always hear nowadays is that people literally are waiting for like their either grandparents, parents, whatever, to basically pass for them to be able to own homes because it's just not feasible for them to own. But
Mm-hmm.
I feel like a lot of people in the market that in the big stereotype is that all foreigners come over, they buy homes and they pack like 40 families into the home. But if you look at it, me being European and Portuguese, we did the same thing when we came to Canada in the 50s and 60s and 70s. That's what they did. They came to Canada with their family and they packed their family and extended family into these homes, right? So those were smart decisions at that time. And I totally agree with you. I don't think that North Americans are very smart in budget. Like we are at an all-time debt to income ratio that we've ever seen before. And it's going to catch up to us where Canadians, Americans, anyone in North America is going to look and be like, we are spending so much money compared to what we're actually making.
Oh yeah.
It's gonna come back and bite us as a society because the debt to income ratio right now is so high. We are spending money like we've never spent money before. Like how many people do you see on social media?
Taking a trip?
Yeah.
Yeah.
And it's
Yeah.
like you work at like Winners. And I'm nice not bash people that work like retail jobs or like minimum wage, but it's like how can you afford going on this trip? Or like every other night eating out at this fancy restaurant and drinks and alcohol and all these crazy meals. And I'm just like, how can this be sustainable? Like it just doesn't make any sense, right?
Yeah. Materialistic consumerism is probably one of the biggest problems going forward. And I think social media plays a huge part in it, because you see everyone else posting pictures of like Greece or somewhere exotic, and you're like, I want to go on a vacation, and that becomes your goal. And so you do it, and sometimes you hurt your own financial resources by doing that. Like I haven't gone on a major vacation in a while. We went on a road trip to New Brunswick and rented an RV doing so, and that was fun. But I'm looking at things and be like, man, like with the business and everything, I can make pretty good money, but I can't justify going on a trip to Jamaica or Belize or somewhere fun. It's just one of those things where it's like, no, my focus is on, getting more rental property so that my kids can enjoy their future and creating a legacy instead of just creating a instant gratification.
Before I go back to my whole real estate thing, the biggest thing I always see too is like, isn't it always funny that people that are actually rich don't act rich? Like, look at Adam Sandler. Like, if you ever saw that guy in the street, you'd be like, wow, that guy is a bum. Like, he dresses like like shorts down past his knees, the baggiest shirt. Like, he literally looks like he just woke up. But then you get people that like literally work like regular minimum wage jobs, and they're buying all the designer brands and always like dressing up and looking good. And it's just like, this guy has hundreds of millions of dollars and he looks that way and dresses that way, but someone that makes $20,000 a year dresses like they own mansions in Miami. It's just like, what's going on here?
Again, yeah, if you read the book Rich Dad Poor Dad by Robert Kiyosaki, it's fantastic. And I love the analogy that they put in there where, the upper class acquires assets, the middle class acquires liabilities, and the lower class always just has expenses. So if you think about it, the upper class, they focus on building wealth. They focus on their money making itself money, and they don't usually worry about anything until they're that rich that their assets are now paying for their lifestyle. Then you have the middle class where they want to keep up with the Jones. So they keep buying the new car. They want to show the world that they're okay. And by doing so, they buy things that are liabilities, whether that be a wardrobe that you're going to have to change when the trends change, but you've spent $1,000 on that or more.
That's me with golf clubs.
Yeah. See, it's all those things.
It's a terrible habit. And my girlfriend will say the same thing. Terrible habit that I have. But it's just like, oh, these clubs are going to make me play so much better. We should get these. And she's like, no, they're not. And I'm like, oh, but they look nice.
And golf is one of those games where it sucks. But then you have that one good shot and you're like, I'm coming back tomorrow.
Yeah, literally. That's me. I'll play so bad and I'll hit like the last shot. I'm like, wow, I'm here tomorrow. You'll find me here again tomorrow. No problem.
Exactly.
But yeah, no, I think that kind of wraps things up. Is there anything you kind of want to leave, kind of any self-plug that you want to put in before we kind of wrap things up here?
I guess self-plug for anyone who's in the greater Hamilton area. Obviously, Donald Porter, Porter & Associates, Remax Escarpment is where I'm at. Online, you can find me at Porter Assock for the Twitter, or what's it called, Instagram handle. I actually don't run that. I have a social media manager, but also started up a podcast as well a couple of weeks back, or maybe 2 months ago now, called Faith Over Fear Podcast. It's based on selling and having faith in the process, and also taking that step forward and forget about your fears and put the faith forward. It's a lot of stuff on sales and that, but no, aside from that, if you have any questions, like, reach out to James. Like, he is a wealth of knowledge, and if there's anything that you need to pass off to me, I can answer. And I honestly really appreciate coming on the podcast, and it truly is an honor.
Yeah, no, I appreciate it, because obviously this is taking time out of your day, your schedule, obviously your clients. So, and I think we've had a great conversation. It's been over an hour now, and like I said, I really appreciate you taking that time, because again, time is money, right? In the world that we live in, so we don't want to be wasting it.
Yeah, but it's all about education, right? So taking my time
100%.
To educate your listeners is invaluable. It's
100%. And that's, like I said, that's kind of where we mesh, is where education for both of us is the biggest thing. We want to turn society from that reactive to a more proactive world. And like I said, people making a way better educated decision is, we know that we've done our jobs if people are doing that, right? So
exactly.
But no, I appreciate you coming on, Donald. And for everyone listening, we always post Tuesdays, 12 p.m. Eastern Standard Time. So make sure you follow and subscribe, whatever streaming service you are using, to make sure you're never missing an episode. But we'll check you guys next week on the Broker Breakdown.